What sellers are actually willing to negotiate in 2026. A lot of buyers assume sellers won't negotiate in today's market. They think everything is firm, price, terms, repairs, take it or leave it. But that's not what I'm seeing in real transactions. My name is Bryan Marota. I'm a real estate agent here in California, and in this video, I'm going to break down what sellers are actually willing to negotiate in 2026 and where buyers still have leverage if they know how to use it. First, why sellers are more flexible than you think. In 2026, the market looks very different than peak years. Many sellers are sitting on homes longer, adjusting expectations, watching fewer showings, competing with similar listings. That doesn't mean sellers are desperate, but it does mean they're more open to conversations, especially with serious buyers. 1. Price. Yes, still negotiable. Despite what many listings say, price is still negotiable in many situations, especially when a home has been on the market longer than average. Similar homes nearby have price reductions. The seller already moved or is carrying 2 payments. The listing started overpriced. Price negotiations are strongest when backed by data, not emotion. 2. Seller credits. One of the biggest negotiation tools in 2026 is seller credits. Instead of cutting the price, many sellers are more comfortable offering closing cost credits, rate buy-down credits, repair credits. This helps buyers lower their cash upfront or monthly payment, while sellers keep their headline price intact. 3. Repairs and inspection requests. Sellers are far more open to repairs than they were in ultra-competitive markets. What sellers are usually open to: safety issues, health-related repairs, functional problems, credit in lieu of repairs. What they're less open to: cosmetic upgrades, personal preference changes, framing matters. Repairs should be about condition, not taste. 4. Closing timeline. Timing is one of the most overlooked negotiation points. Some sellers want a fast close, extra time to move, a rent-back period, flexibility on possession. Matching the seller's timeline can be just as valuable as price, sometimes more. 5. Contingency structure. Sellers are paying close attention to contingencies in 2026. Shorter, cleaner contingency timelines often make an offer more attractive, even if price is similar. This doesn't mean removing protections recklessly. It means structuring them intelligently. 6. Appraisal flexibility. Appraisals are still a concern in many deals. Sellers are more comfortable negotiating when buyers understand realistic value, are flexible in how appraisal issues are handled, don't immediately threaten to cancel. Confidence and clarity go a long way here. What sellers are less willing to negotiate. It's just as important to know where sellers dig in. Most sellers are less flexible on unrealistic lowball offers, last-minute retrades, major cosmetic demands, buyers who feel uncertain or unprepared. Strong buyers get flexibility. Weak buyers get resistance. Final thought: negotiation in 2026 isn't about being aggressive. It's about being informed, prepared, and strategic. Sellers are willing to negotiate, but only when buyers show they're serious, realistic, and easy to work with. If you're planning to buy and want to know what's negotiable on your target homes, I'm happy to help you structure a smart offer. You can call or text me at 562-484-8138 or message me on Instagram at Bryan_Marota. Even understanding this before you make an offer can save you real money.